105.7 Light FM, that's MJ there. I am Morning Dave. Good morning. It's 8:42. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. I'll do that. You can listen to us and get some questions to ask him or her, too. On the phone, taking in with your money, is Philip Statler from Statler Financial Services in downtown Sebring. Good morning, Philip. How are you?
Good morning, Dave. Hey, doing well today, halfway through the week. And as we close out the month here shortly, we're just seeing a little bit too much red ink, I'm afraid, Dave.
Yeah, just up and down, and more down than up so far this week, which is not good news. First of all, to set the table where we were, yesterday was a modest down day on the blue chips and then kind of a bad one for the high techs. Dow was down by 0.05%, down $26. Whoopee. S&P 500 was down $35. That was just short of 0.5%. NASDAQ down the better part of a full percent, down 223 points, and the Russell was down 1.15% just to make the vote unanimous. And I got to believe some of that came from the fact that oil stayed over $100 a barrel pretty much all day yesterday, didn't it?
It did, Dave. It's one of those things, and we're seeing Brent crude actually get up to about 114. Now, that's not what we look at here, the West Texas crude, but that just shows you what oil's doing from that standpoint.
Absolutely. And just what the Europeans needed, one of the biggest French banks, their analyst department this morning put out an analysis saying they expect crude to threaten $200 a barrel, and that's going to cause a worldwide recession, they say. I mean, some things, it's number one, it's a given. Number two, why on earth do you have to do that while the market is hinky to begin with, right?
Exactly. Oil's up almost 4% this morning. So it just makes it tough in this marketplace. So much stuff relies on fuel, petroleum, and I was reading yesterday some headlines about jet fuel, a shortage of jet fuel starting to affect European markets.
I know Lufthansa Airlines has cut back a lot of their long-distance flights. Of course, they're a long-distance carrier going back and forth across the ocean, but they're cutting back flights in order to cut back their usage of jet fuel. So it's affecting us across the economy, and even in places we're making fun of it a few weeks ago. Even Legos are costing more because plastic is made out of petroleum. So it pretty much messes up all manners of industry. Today is going to be a really, really full day, and it's kind of make the macro numbers the government dumps on us almost meaningless by the time we're done, because not only do we get the Fed rate decision, it's going to be accompanied by Jay Powell's swan song press conference after the decision comes out, where he will have absolutely no reason to hold his tongue, and you never know what he might say. Add to that the fact that, 4 of the Magnificent 7 tech stocks all report today. This is going to be one of those market-moving days that we could have a real whipsaw on the charts today, couldn't we?
Well, we could, Dave. It all depends on what all those things report to. Let's face it, it's going to be could be a long day today.
Yeah, I think it possibly could. Those government reports we talked about, you found them, I didn't earlier. Durable goods were a pleasant surprise. This is businesses buying the stuff that lasts. The gain in durable goods orders last month, almost 4 times what they expected, 0.8% increase. That's got to be good news.
It is, Dave, and it's really better than February's number, which was down 1.2%. So it was some good news on the durable orders front, finally. As we continue to watch, that's going to help some of our economic growth for sure.
Absolutely. And housing starts came out. We were giggling a little bit at the outset. They're finally catching up after that massive government shutdown that we had, both February and March. March was a minor surprise, and February was about on target for where it's at, which kind of fleshes out the picture that you and I have been kind of having drawn for us now for months. We're going in the right direction, just nowhere near as fast as we'd like to.
Well, that's right. That seems to be the deal right now is that, and if permits are any indication, housing starts will be a little less in April than they were in March, if things kind of work out the way they had the last 2 months. So we'll see how that does. The consumer confidence was up, which was a good thing yesterday afternoon or yesterday morning after you and I got off the air. That was up by a little bit. So that was obviously didn't help the markets any, but it was a good news there.
Yeah, there were some up and downsy jerks on it. One of the upticks happened about the time they released the consumer confidence numbers. So we were trying to stay above the zero mark yesterday, just couldn't succeed it in the face of $103 oil. Probably the biggest news item that's going to end up showing up in the evening news is going to be, what does Jerome Powell say as he says goodbye to the Fed? I mean, now that they've got the path cleared for the Senate to approve his successor, the odds are this will be the last time we hear from him. You think about it, over the last few years, Powell's had a war with the president, the biggest inflation fight in a generation, bunch of high-profile bank collapses. I mean, this has been probably one of the more eventful Fed presidential terms that you've had in a long time.
It has, David. And I'm sure he's tired of it by now. You know, he's had to be under scrutiny a lot during his term as the Fed president.
Yeah, they say it's 99.5% certain that they aren't going to change rates in either direction. I mean, a cut right now, given the inflation persistence, wouldn't be a good idea. A raise in rates right now, while we're a little testy about the war in Iran, probably would be equally detrimental. So the odds makers are saying 99.5%. There's not going to be any surprises on the rate issue. But I got to believe when Powell gets that press conference, he has absolutely no reason to give a fig what President Trump thinks of him now. He may actually let them spike his coffee a little and say whatever he wants.
That would make for a very interesting press conference and probably his best one yet.
Let's face it, those guys are pretty boring on a normal press conference. So maybe a little toot wouldn't hurt his feelings one bit. At the end of today, it looks like, or maybe during the day, but not yet, we've got 4 of the magnificent 7 tech stocks that are going to be reporting today. That's probably going to be the big market mover, but there are a few that are out there that have already reported, and when you mentioned some of them, the Humana name kind of caught my eye because with that reduction in Medicare reimbursement that came out of the government, or a smaller increase than expected, that's been causing a little bit of hurt on the health insurance companies. How did Humana do last quarter?
Humana actually for last quarter did okay. They beat on revenue and on earnings. However, they have revised their full year revenue outlook less downward, so less than expected from the analysts' expectations. So it has them better. They've come back a little bit. They were down as much as 4.5% earlier this morning. Now they're down about 2.1%, Dave.
Sounds like healthcare is not the growth stock that you thought that people thought it was a few years ago, right?
No, right now it's struggling, at least on the insurance side. Hey, another company that reported, Seagate Technology, hard drive storage disk type company. Their fourth quarter revenue better than expected, or third quarter revenue and earnings beat expectations. I really like this description of their fourth quarter earnings outlook. They expect 3.45 billion plus or minus 100 million, and they expect their adjusted earnings to be $5 a share plus or minus 20 cents. I've never seen one come in like that. I thought that was kind of interesting, but they're trading up 15% this morning.
That's actually, given the upset in the tech markets right now with the memory chip prices, that might actually be good news. I mean, memory chip prices have gone through the roof, and all of the big hard drive manufacturers are making far more solid-state memory-based drives instead of those old copper-covered platters they used to make. I would imagine there are probably some reasons for some iffiness on that.
Yeah, and you've got Western Digital, SanDisk, and Micron are all benefiting from that as well.
Sector buy increase. I got
Yep.
it.
Yep. So, hey, this one was interesting to me because I didn't really realize who this was. A company called Mandazul. I think I said that right. International. Guess what they
Gesundheit.
do, Dave?
Hmm.
They make Oreo cookies and Sour Patch Kids candy. Not didn't
Huh.
know that. Yeah. So,
I didn't either.
yeah, I thought it was one of the other major companies that made them, but they beat on earnings and on revenue, and so they're trading up about 2.5% this morning.
Far out. Maybe everybody that got addicted to Girl Scout cookies had to replenish their supply after they ran out of Girl Scout cookies.
All right, I know we're running close on time. Let me give you one
Yeah.
more at least. Starbucks, they did okay for this last quarter. They raised their full year outlook, which is always a good for a stock. So that has them trading up today 4.6%.
Cool. Good news. Resetting the table, an off day yesterday, not catastrophic, but an off day, and some of it being driven, of course, by the price of oil and the mess in Iran. 45 minutes before we open this morning, what are we looking at?
So right now we've got a tinge of red. The Dow is down $17. The S&P 500 is down $1.20. The Nasdaq 100 is actually up a quarter of a point, and the Russell 2000 is flat right now. On the other side, we're seeing some red ink on the precious metals. Silver down 1.8%, gold down 1.1%. That black crude oil going up 4% right now, $103.96 a barrel.
Some book. Got an awful lot of the same kind of syndrome going on in the overseas markets. The Asian Rim market mostly was off overnight at the 6 a.m. close, except the mainland Chinese markets were up markedly, as a matter of fact, by over a full percent on average. European markets are modestly down this morning, watching our futures. Average European index is down by about 1/3%, not monstrously, but down this morning, halfway through their trading day. Getting my retirement together takes a plan. I ain't got a plan. How do I get with you to figure out how to get one?
Dave, planning is important. Give us a call at 863-382-0037, and let's talk about how we can help plan your future retirement. So it's the retirement you always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And newstalk730am.com, too. I appreciate it, my friend. I'll see you tomorrow, all right?
All right, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week has gone well. I look forward to speaking to you again tomorrow. Take care. Bye now.